Welcome back to the Hard Truths podcast. This is episode 36 and episode 6 or 7.
I think it's 6.
Of the 6 of the mini series, where we're basically taking beginner or newbies, really, people that know nothing about fix and flip investing, from A to Z, from how to identify a property to invest in that would actually be worth your time and money, to the closing table and or ultimately making money on the deal. And right now, in this episode, we're going to be talking about assuming that you're going the hard money route, structuring your loan and preparing for closing. So yeah, why don't we just hop into it?
I'd love to do that.
We have an entire episode talking about structuring the loan.
Yeah.
Why?
Because I feel like to be successful, you need to have good structuring and proper planning. So it's like anything. If you're going to build a house, right, you want to have blueprints, and the blueprints will tell you what you're trying to do and what your ultimate goal is. Loans are no different. Understanding how you need to structure your loan to, again, like we talked about, put your best foot forward, build that trust. Ultimately, your structuring will make you successful. And as we talked about last episode too, our goal is for everyone to be successful. We want no one to fail. So we're going to just get into it. It'll be a little shorter than our last, one. I think went 50 minutes.
Yeah.
Yeah. It got a little long. We got passionate. So
there's nothing wrong with that.
100%.
Yeah.
Awesome. So we're going to get into a couple of specifics. Before we do, just a reminder for everybody.
Yeah.
If you have questions, you have specific items you want to address, you can reach out to us. Where can they reach out to us, Denver?
I think the easiest way is to leave a comment on the YouTube video, on our YouTube channel, The Hard Money Co. But if you're on our website, you can go to the contact area and there's an email there, and you can email us there, DM on Instagram at The Hard Money Co. Multiple different ways.
Yep. Awesome. And don't forget to subscribe. But
yeah, please do.
Please. No. Anyways, so, getting into structuring your loan and the importance of kind of getting it right, from get-go, and keeping in mind that things do change, and we'll get into that. Mm-hmm. Things can change, I should say. So it's important to be a little bit flexible, as we've discussed, but hopefully we get it right. It's straightforward from jump. So properly structuring your file really, at the end of the day, increases your profits and minimizes your financial risk. So for example, structuring your loan with $60,000 in repairs when it's going to hopefully be 55 leaves you a little wiggle room. Scheduling it for 60 when it's like, well, it could be 65, kind of put yourself in a tough spot. So you can create issues moving forward if you don't take time to structure it correctly from the get-go or aren't willing to change it as things progress. So we do, as hard money lenders, offer flexibility on plans. We allow people to build in contingencies. We allow you to pick your own contractors. We give you our opinion and obviously our money to fund your deal. It's up to you to do the research and set yourself up for success as best as possible. All right. So in 2023, the average fix and flip profit margin was $67,900, which is a crazy number. Keep in mind that's margin, right? So they're going to have to pay a little bit out of there. That's not all pure profit. Yeah. At the same time, that's a pretty large number. So if they've got 30 grand into it up front, they just made roughly 38K on their 30 grand.
Yeah.
So hell of a deal. But just kind of keep that in mind. Projects are going to be different in Wisconsin. We've obviously done them in Florida, Arizona, New Mexico, New York. Every state's going to be a little bit different, of course, as is your risk. So a couple of items that I would want you to just ask your lender to make sure you can maximize that profit or understand what your profitability is going to be is, do you know how the loan terms affect your profitability? So it's like, if something is more expensive, is that a better thing or a worse thing? Well, typically it's a worse thing. However, does something being more expensive help you get your project done quicker? Are you ultimately getting your profit quicker? You're saving time. Time is money. It allows you to do another project. So how are those loan terms affecting your profitability? Not only on this deal, but also on your timeframes for other deals moving forward. We want you, again, to do more than one of these. And then, are you clear on how to allocate funds for the purchase, the renovation, and any contingency budgets? Example, we ask you to complete a scope of work. So when you find a property that you love, hey, it's 10 grand for flooring, 20 grand for the kitchen, 10 grand for the bathroom. Great. How are we going to pay you for that? What does your scope of work look like? When does your contractor need their money? Are you doing draws as part of it, giving it to you up front? That's up to you to ask us as a lender to make sure you understand what goes into it, frankly. And then that contingency budget. Hey, I thought it was going to be 50. I built it for 60 for the repair budget. I didn't use the other 10 grand. What happens to that money? Like, that's something you want to know too. Spoiler, that comes off of what you owe on the loan. So you borrow 110, you didn't use 10 grand. Now you owe us 100. So really understanding what goes into structuring your loan, again, affects your profitability. Yeah. So what goes into a loan structure? We've talked about the documents you need, kind of how to put your best foot forward. So a lot of this is going to be a refresher, but we just, again, want to make sure you have the tools in your toolbox to be able to evaluate your next project. Okay. So your loan amount and your leverage. After repaired value, we've talked about that at length, we'll say. Yeah. Most hard money lenders are 65, some are 70%, some are project specific. So, hey, you're doing a 5 unit versus you're doing, 5 different units in one building, or you're doing a single family house or a 1 unit in one building, that may affect that after repaired value too. Mm-hmm. Borrowers, you need to contribute a down payment and or equity in another property that you own. So again, that's going to affect the ARV because you're going to pay X for a house. You're going to put Y down. You're going to borrow Z for repairs. All of those together go in and factor into that after repaired value. So we do want you to contribute some of your own money. We talked about getting, gifts, doing kind of what we call gap funding, having somebody else give you the down payment for a percentage of the profits. You can really be creative with that. We have a client here in Milwaukee that we had talked to previously, and some things had changed with his budget. He needs another $10,000 for kind of some contributions to the loan, we'll say. So he is actually going to try to get a gift from a family member. Hey, I've got $10,000. I want to see you be successful at this project. Why don't you let me help you get to the closing table? So that is an option with him, which I think is kind of cool.
It's a great family.
It really is. Yeah. I asked him if they had room for one more, but he said probably not. I know. We're trying though.
Shoot your shot, man.
Yeah, you might as well. I love that. On average, investors will use 20 to 30% of their own funds in fix and flip projects, meaning that down payment, those loan costs, whatever that is, typically that's going to be their contribution. And then the rest is going to be lent from a hard money lender like us, private money lender, whatever that might be. So that loan structure is loan amount, and then what's your leverage, aka your ARV, how much equity do you have? Loan term and interest rates. All lenders are different. Explore the term, usually 6 to 12 months, depending again on the project, on the lender, what your goal is. Interest rates are higher. We talked about that. They're interest only. So a lot of times those payments are going to be very similar. And then, because the cost of borrowing that money should go into your budget, right? Like, hey, I'm paying origination fees and points, like we've talked about. I'm paying 1% to fund this file. I'm paying 5% or 10%. Those are all going to be different numbers that are going to affect your budget and ultimately your profit differently. So take those into consideration when you are preparing your kind of loan, to go to the lender and kind of figuring out what you think your structure needs to look like. And then a couple of key questions to ask, and we haven't covered this too much, but let's just give you a kind of an example after the question. But, hey, lender, what's your maximum LTV? What's your maximum loan to cost? You will hear those two terms. Loan to value is what are you borrowing versus what is that property worth? Loan to cost is, okay, I'm buying a house for $10,000. It needs $90,000 in repairs. That total loan, right, at that point is $100,000. If you contribute nothing, loan to cost is how much of that $100,000 are you going to contribute as a percentage? Example, I'm going to contribute $10,000. My loan to cost is 90% on that specific example. So those things are going to be different. Like we're here in Milwaukee, Denver. You and I went to a property. I think that property was $18,000.
Sounds right.
Something like that. Mm-hmm. And then he's going to put $80,000 into the property. So like, let's just use $100,000 example. At 18 grand, 20% of that is $4,000. So I'm, $4,000, we're going to lend you 96. it gets a little challenging, right? For a lender, we got to see a little bit more, as we call it, skin in the game. But so that would be loan to cost. Okay, we'll do 95% loan to cost. Like, yes, I know it's $5,000, but it's 5% of the entire amount that you're borrowing. So the only time that I feel is pretty relevant is when you are buying a cheaper property that needs a ton of repairs.
Yeah.
Nothing wrong with that. Just understand those two are not interchangeable. And then, are there prepayment penalties? We talked about this. If there's a prepayment penalty, go to a different lender, please. I love that too.
Don't do it. You'll see it on YouTube.
Yes. And you should watch on YouTube, because I'm telling you that in and of itself was worth it. So
agreed.
All right. So we've gone through, we've already sent all of our docs. We've structured our deal. It's like, let's get to the good stuff. Let's start moving towards closing. Right. So what steps are involved in the closing process? Denver, did you and I talk at all about the title for that project that we just did in Chicago? There's a title issue. Okay. No. Let me run you through this and why this is important. So one of the steps in the closing process is title search and title insurance. So a title company is going to say, all right, I'm going to transfer this loan from John to Susie at closing. They will basically ensure the fact that when Susie takes over that property from John, there are no liens against it. So if John had what they call a mechanics lien, like somebody did work he never paid for, they'll ensure that that's paid at closing from John and not from Susie. So they really kind of protect you and make sure that you take legal ownership without any issues. That being said, of course, people make mistakes. So we just closed on a pretty cool deal. Client is a commercial developer in Chicago. He has some land. We lent against the land itself, not something that we traditionally do, but we did our due diligence. Get all the way to title. Hey, there's 4 parcels. They've been combined into 3. Bunch of numbers got moved around. Long story short is Cook County recorded it incorrectly. And it was about $1 million worth of land. So had we have not gone through title and looked at it and helped him and been a partner, he's planning to move on some land to do some developing for land that he doesn't even legally own on paper. Despite us being able to show it closed, he's the legal owner. Title insured it. Title did end up making it correct, but mistakes are made, and that's something that's important. So if that doesn't get caught by us for whatever reason, he's out $1 million, right? So it's
a lot.
It's a lot. And when we saw that, we were a bit surprised, we'll say.
Yeah.
It's like, yeah, I own it. I was like, no, you don't. No, you don't. So again, it's important to be prepared for closing, but that title company is going to be essential in you getting ownership, and ownership without any extra surprises, we'll say, approximately 24 months later in his case. And that title insurance also protects us as the lender, because again, we're going to lend you $80,000 on property X. We want to make sure that, we have the ability to get paid back when you sell that house, because the title company is going to require you to pay off the loan to F Street or the hard money co. For that property before you can sell it, or at closing. Does that make sense?
Perfect.
Awesome. So preparing for closing, you've already had an appraisal. Look at the appraisal. That's what we use for the ARV. It's important to understand the comps that we use. So, we've talked about in Milwaukee, 12 blocks in one direction is 12 blocks different, in another direction. So understanding your comps, seeing what the lender used. So when you are going to sell it, you have an idea or a baseline of what's it going to be worth.
Right.
Then you've already seen the loan agreement from us as the lender. That is all of the terms. If you have questions, ask. There are no stupid questions. Mostly. No. Please ask, though, because you're signing an agreement to pay money back. Like, if you're going to sign up to borrow $80,000, $100,000, like, please read the lines.
Yeah.
And if you have questions on it, ask. Again, the lender should not run from your questions. They should embrace your questions, help you answer them, and make sure you feel comfortable with what you're doing. So that loan agreement, you're going to sign that at closing. And it's like, okay, what documents am I going to need for closing? Like, great question. Documents you're going to need is your ID and your money. Hey, I'm going to send you a wire for $20,000 that I need at closing. Great. That'll get sent to the title company to clarify. But whether it's a wire or a cashier's check, or great news, you're using collateral. You don't have to bring any money to closing. Like, cool, I can sign this paper and get a new house. Great. So kind of cool. We talked about it, but getting prepped for closing, that loan process when you're with a lender to get to that point that you're ready to prep for closing is usually 10 business days, let's call it. So it's pretty quick. So it's important to just have your ducks in a row. Again, be prepared, ask questions, know your numbers. And then a couple of questions we want you to ask yourself, but what am I going to need after closing, right? Like, what should I budget for? Well, you're budgeting for payments. And we had talked about, we're just going to recover it, but
it's just a quick recap.
Great. You closed today. I don't even know what today is. It was December 4th, I think, or 5th? 5th. All right. December 5th. You closed today. You skip January. Your first payment is due February 1st. So you've got 55 days to get your project moving before that first payment is due. So you can get a lot of work done, hopefully in 40 to 50 days. Yeah. So, kind of structure your closing, again, your time frame for closing, your date you're going to close, make it useful for yourself. If you're using a lot of the funds that you have, maybe look at closing, beginning of the month of December. Again, you're not making a payment in December. Yes, you're bringing cash to close, but there's no money out of your pocket in January. Your first payment is due February 1st. So you can really set yourself up for that. And then we had talked about, the list of documents you'll need. You'll get a final loan disclosure from the lender, letting you know, hey, this is where this fee is going. Here's what's going into your escrow account for your repairs. Make sure you review that. And again, ask questions if you have them. Okay. I know we're kind of cruising through this, but any questions on where we're at so far?
No, makes sense to me.
All right. I feel like you're almost ready to buy your first flip, Denver. We're going to get you there.
Pretty much. We
might just do it together after this show's over.
I'm down.
Oh, man. All right. Just a couple common pitfalls, and we've talked about this. Preparation will save you from these, but there's a difference between underestimating costs and building a contingency plan. So, client A doesn't understand it's going to be $50,000. They only bank for 40. Hope you got an extra 10 grand in your pocket because you're going to need it for repairs. That client may still be successful, going to be a little bit harder to be successful if you're coming up with 10 grand you don't have, but a lot of people can come up with money when they need it. Versus the other person who did a contingency plan. Hey, I built in 15%. Yeah, I know it was going to be 40. I built in 46.5 or whatever that math is, 46. Yeah, cool. Good thing you did because you need an extra 10. Now you only need 4. It's like hell of a lot easier to come up with 4 than 10 for most people.
Yeah.
And then, just communicate with the lender. Like, ensure that the information you're providing is accurate. The last thing we want to do is get 11 blocks into the 1 mile journey and me to say, well, the 3 things you told me are not accurate. So now we kind of go back 9 blocks and we're starting over again. So just communicate. And if the other communication is not good on the lending side, probably a sign to maybe move to a different lender, right? All deals are equally as important. People have to prioritize their time, of course, but you should absolutely feel like you're prioritized and that your questions are being answered. Okay. And just a couple of things to reflect on, have you analyzed all the project costs, or have you built any contingency? What does your scope of work look like? And then the question that none of us really want to think about, but it's important, is what do I do if things change? Right. So I like talking about real loans, but a loan in Chicago, the client had built out some funds for some HVAC, or a new furnace, I should say, that needed to go into the house. He was quoted $8,000 and ended up being $18,000. He had a pretty large repair budget, so he was fortunately okay with it. Not happy, but okay with it.
Yeah.
But because that had changed, he went back to us post-closing. He adjusted his scope of work and said, hey, look, I know I was going to do these high-end finishes in these kitchens. It was a duplex. I can't do that anymore. I'm going to do middle of the road finishes. It'll still look really nice. I'm not going to change anything. But he said, I got to put in an extra $10K to get these furnaces right, which was new furnaces rather than repairing the furnaces. So, unexpected costs. He did have a contingency built into his budget, and he did have the flexibility through us as the lender to make those changes on the fly as needed. So instead of him having stress and being like, oh shit, where's my 10 grand going to come from? It was, let's be creative, let's problem solve, and let's figure it out. Ultimately, we did.
I tell you, that was an experienced borrower.
It was, yes. This is his second deal he'd done with us, his third flip overall.
So really not that experience.
I mean, yes, he had experience for sure, right? But not somebody who's done 50 flips.
Yeah, I was going to say 3 versus double digits.
Yeah.
A whole lot of experience. Yeah.
No, and I mean, he also understood that like he's got to be flexible. Like when he called, he wasn't happy.
Right.
It's like, I got a problem. And I was like, let's solve it. So we did. Yeah. But again, it's important to have that relationship. Like he was prepared when he came to us. We had a good experience up until that point. So it's like, let us help you. Let's get through this. But yeah, excellent question about the experience too. Not everybody needs experience to be successful. His definitely helped him remain a little calmer maybe.
Right, yeah.
But, we have experience as a lender. Will help you walk through it as best as we can. So.
Beautiful.
All right. And then let's just talk about a couple other questions to kind of ask yourself. I know we had talked about percentages of contingencies, but what percentage of your project's budget is allocated to contingencies? 10 to 20% is pretty normal. If you want to go to 50, that's fine. If you want to do 5, that's fine. I'm not going to discourage.
Subtle shot.
No, I'm just giving you shit. But no, I mean, that lets me know that you're prepared and you have the ability to be prepared for something negative if it happens.
Yeah.
Don't borrow more money than you need, but have it built in if you feel like you may need it. All right. And then how do you communicate your progress and challenges to your lender? Well, great question. We just talked about our guy in Chicago. He called me, right? Pick up the phone, call us. We have a gal here who only does our draw requests. You need your scope of work changed? Kayla's your girl.
Shout out KB.
Yeah, she does a fantastic job, by the way.
Yes.
You need your scope of work adjusted. You need a draw request a little bit quicker. You need a little larger draw request than you initially anticipated. Be flexible. We will be flexible, but communicate your problems, issues, and also your wins. Hey, shout out Justin. We talk about him almost weekly, but he just talked to me yesterday and was asking me about a project, if we can do it for him, and asked him about his other projects. He's winning on his other deals. It's like, let's hear about that. It's exciting for us as your lender. We are truly your partner, hopefully for life, but at least on this deal moving forward.
Yeah.
Cool. And then the other, is what strategies are you going to use to ensure a smooth closing process? Really just be prepared. Have an ID, have your money in line, complete the conditions the lender asks. You're ready to go. It's not that tough. Closing is some of the most exciting time. I'd say closing the project that you're about to start is the second most exciting time in that entire situation. The first is when you close and you're selling it and you actually see what your hard money looks like.
Yeah.
I think that's pretty cool. Okay. And then just steps to kind of take after closing, and we'll kind of wrap it up here. And again, if you guys have any questions, reach out to us. We're more than happy to help.
Please.
So after closing, detailed payment plan. We talked about it. You close today, you skip January, first payment's due February 1st. Are you on auto pay? Are you going to forget about it? Hopefully not. Yeah. But are you on auto pay? Try to avoid late fees. There's a late fee if you pay after 10 days. Traditional mortgage is 15 days, but there's going to be a late fee when you're not holding up your side of the bargain. So make sure you're planning for those payments, and then begin your renovations immediately. Don't wait for 6 weeks. You're just going to sit on a property for 6 weeks and pay heat and water and not work on it.
Yeah.
Nope. I mean, make sure your contractor's ready to go. They understand your closing time frame. Hey, Denver, you said you're going to do these renovations for me. We still good? Can you start in 2 weeks? I got you. I'll start 2 weeks from Monday. Perfect. Set up your time frames, communicate, make sure you are set up for success, and then prepare yourself for progress updates. I don't need you to tell me, although I would love to hear it. I don't need you to call me every week and tell me how it's going. What I do need you to do is have your scope of work so that you know when your next draw is coming, right? Those are progress updates for us. Hey, did you see the, flooring so-and-so just did? Hey, they just did a bathroom. KB, she's amazing, but she pulls us aside and is like, dude, check out this kitchen. Isn't this cool? So give us progress updates. We will look at them, obviously, to make sure you get your money for your work, but also it's exciting for us. We want to, again, see you win.
Yeah, so we're people too. We like stuff.
We do. And we like, bringing up people around us. It's great to be successful. It's even better to help other people be successful.
Yeah, very true. We talk about successful projects in our Slack channel all the time.
All the time. We actually go to them too.
Yeah.
So
as of recently.
yeah, we got one next week, by the way. So
The one in Waukesha, right?
yes, sir.
Yeah, that'll be fun.
Yeah, it'll be cool. So we're going to check out a commercial mixed use building that we funded for a pretty cool client. So
Dope.
it'll be awesome. Yeah, I think that's pretty much all we have, for today. Again, these are, a little bit less exciting, we'll say. But I think it's important information for us to share with you and important information for you to hopefully retain. This stuff will all, hopefully make you more successful in the long term.
Yeah, and I think it'll be more exciting once you actually start the process and these things are happening to you.
I would agree with that.
Yeah.
Most of it's exciting, most of it for sure.
Yeah, I mean, there's dull parts of life in general. Like nothing is 100% exciting. Nothing's 100% boring. You can find some enjoyment and
Yeah.
black and white or gray. There's a gray area and everything.
Yeah. There's enough gray outside in Wisconsin right now for me to not need that in my life.
Talk about it, man.
Although I am looking out, it is sunny right now. So that's good.
For now, it's great.
Yeah.
As long as we're working, let's keep it sunny. But cool, yeah. Easy, straightforward, simple episode. Like Steve said, did you mention what the next episode is going to be at all?
No, so we're going to talk a little bit about just kind of budgeting and managing your renovation costs.
Okay.
That's obviously going to be part of it. Managing your renovations as you move forward with that contractor, with yourself, with multiple contractors. What does that look like? And how can we help you be successful there?
Simple enough. Cool. Well, with that being said, this is episode 36 of The Hard Truths. I'm Denver Biddle III. He's Steve Traub. We will see you next week. Peace.